Okay, good afternoon, everyone, and welcome to the Founders First Capital Partners webinar, State of the Economy, Scarcity of Capital, with some special guests from the Veteran Security Operations. Today's webinar, we will go over the following when we get to that slide. There we go. So some topics to go over today. We have a welcome and an introduction, which we'll get to in just a second. The new fundraising conundrum, the growing need for capital for diverse-led businesses, some reasons for scarcity of capital on the market, a little bit about the pandemic's role, on a positive and a negative front for businesses, some solutions to maximize capital efficiency, and then we'll go through a Q&A on our panel, and then we'll open it up for Q&A and chat from the audience. So feel free to utilize the Q&A box and the chat box below. Today's presenters are Casey from the Founders First Capital Partners team, and then we have Ryan and Christian from Veteran Security Operations, and I'll let you all go ahead and introduce yourselves and take it away.
Thanks, Tracy. Yeah, I'm Casey Estrada, Managing Director here of our investment team, working to provide access to capital to small businesses that are in scale mode. We are very happy to be working with Veteran Security Operations to be able to provide them capital as they continue to grow, and I'll let the guys here introduce themselves.
Thanks, Casey. My name is Ryan Kleynhans. I'm the CEO of Veteran Security Operations. I have a background in the military of, I believe I did eight years, I believe, almost to the day. My background was not in security then, but once I got out of the military, I immediately got into security because my job didn't translate so well to the private sector, and it was very competitive. So I ended up in the security industry for the last 5 or 6 years, and eventually found my way to VSO, and I'm now here. So thank you for having us, and that's basically it about me.
Okay, awesome. Hi, Christian Tomlinson. I'm the Chief Operating Officer of Veteran Security Operations. I am going on to 8 years in the Army Reserve. It's kind of my military background. I started as a 91 Bravo, which is a wheeled vehicle mechanic, and I went into a 31 Echo, which is a corrections officer. Essentially private side. I've been in the security industry for about the same time, 5 to 6 years, and found our way into Veteran Security Operations, and now we operate this great company together with Ryan. And thank you, Founders First, for having us today on this webinar.
Absolutely. Yeah, well, let's jump into backgrounds of both of our businesses here. So Founders First, we're a mission-driven organization. Our main goal is to aim high quality jobs into the marketplace by supporting businesses that struggle to gain access to capital. So we fund a diverse group of businesses, specifically focusing on veteran-owned businesses, women and minority-owned businesses, as well as businesses that are serving low to moderate income areas. Obviously, we love the work that Veteran Security Operations is doing, as a business run by veterans, but also providing jobs, high-quality jobs to veterans coming out of service. Fits very well in with our mission. And we accomplish this by providing education and mentorship via our accelerator programs, and also by offering direct access to capital through 2 specific products, revenue-based financing and term loans as well. Our market, diverse-led companies, as I mentioned above, focused on earlier stage businesses, but with annual revenues typically between $500,000 to $10 million, specifically focusing on the B2B space. Whether that's tech or tech-enabled services. We do like the business-to-business component of businesses. We're relatively industry agnostic, but as I said, our funding programs are geared towards businesses that have a predictable, recurring or contracted revenue streams. And then just as a general snapshot, Founders First has supported over 600 small businesses. Of those, over 60% have increased revenues and profits, added recurring revenue streams, and hired for high quality jobs. And over half have gone on to raise outsized capital as well. Slide kind of touches on that. And our new partners here, Veteran Security Operations, I'll turn it over to the guys here to tell us more about them.
Yeah, no, for sure. So as you can see, these are two of our VSO security officers. If we go ahead and go to the next slide over here. But essentially what veteran security operation is we are a higher end security service, physical security service for the state of Washington as of right now. Essentially what differs us from other security companies is one, our training, our discipline, and our equipment and our means to actually deal with situations as they arise. Compared to other companies, like you aren't seeing us on segways or in malls, right? We do more of a higher end clientele, whether that's logistics centers, financial institutions, etc. We do dive into a little bit of executive protection and high asset protection. Essentially, our company was founded on two purposes. The first purpose was to provide service members transition out of the military, a very seamless transition, because every soldier, Marine, airman, sailor, etc., they pull some form of guard duty or security within the military. Therefore, that skill set easily translates to the private sector of security. The second purpose was to refine the security industry from lazy to proactive, because a few years ago, before this uptick of crime and COVID-19, honestly, security was kind of looked at as like a laughing stock, a joke, right? It wasn't taken as serious as it is now today, because safety is everything today. So with that, we're really here to refine the image of security and also make it a more competitive and career level position than what it was back in the day, where it was just another job. Some services we provide is we prioritize and are primarily armed security. We do mobile patrols and courteous patrols, as well as armed bank runs. We do executive protection and loss prevention. Of course, down the road, with the help of this funding from Founders First, we are looking at other avenues as of bail enforcement duties, private investigation details, and maybe even potential maritime stuff. Because now with this assistance of Founders First, we'll get into this more in depth later, but we were able to actually start focusing on these future ambitions for us. Side stuff we do, we also provide public safety training for just the public, right? So we do provide CPR, first aid, and AED training to the public. We provide firearms instructing. We do risk assessments for establishments. We do active shooter response training, etc. So we are a very well-rounded company in the services we provide. And of course, with us being a veteran-based company, about 85 to 90% of our personnel are either veterans, or they're active duty personnel doing an internship with us, or they're guardsmen - reservists. So that's really kind of the backbone of our company.
Thanks, Christian. Yeah, that was great. Great background. From our perspective, we saw a growing business. We saw businesses supporting our veterans, and we saw a business that had very good relationships with their clientele. One thing, I'm sure Christian and Ryan are being modest here, but we were very impressed with not only the amount of customers that they're serving, but some of the names as well. Of course, we don't need to go into that, but they certainly do serve a very well respected group of businesses here up in the Pacific Northwest. So to go a little more into the funding aspect of our conversation today, really what Founders First is trying to do is fill a gap in the needs of what small businesses are able to find in the capital marketplace. So on one end, it's very easy for businesses to find short-term, high-interest, debt, whether that's merchant cash advance, some type of like merchant financing, other types of funding like that, which very easy to get, very quick money, but it can tie up a lot of your cash flow. On the other end of the spectrum, larger check sizes can be written. Typically, though, you're giving up equity there, right? So what a business, and specifically like what a business like Veteran Security Operations needed, or other maybe, light asset or non-asset businesses might need, or something that's in the middle, something a little more long-term to help out with cash flow issues, but, can provide a large enough check size that the business can put that money towards growth, right? It's one thing to have a cash cushion and focus on working capital needs, being able to, pay out payroll and things like that, but to have additional capital on top of that to put towards large growth initiatives to keep the business, growing and scaling, towards the future. So that's really where our model comes in. Not a lot of options typically that, one, don't provide equity, or two, aren't, short-term or high interest. So we fit right kind of in the middle there. And then, just to represent that graphically. So again, no collateral required, similar to venture capital, but you're not giving up equity to get that check size. And then, unlike some of these other, more alternative lenders, it's going to be not as expensive, longer terms, and of course, the no collateral required part. We do work mostly with non-asset or asset-like businesses. And reasons currently for scarcity in the marketplace. So this is something we're really seeing here, is we're heading into more uncertain economic times. One of the first indicators of economic hardships are the capital markets. And as it is right now, there's just a lot of uncertainty. A lot of this is coming out because of COVID-19, political instability, other factors, of course, is creating an atmosphere where investors and lenders are a little more hesitant to deploy capital. Along with that comes regulatory restrictions. This is always something that's always being looked at. Market consolidation as well, but also investor behavior. So, it's just things are slowing down from a capital perspective. And one thing the Founders First is striving to do is to continue to be a constant provider of capital that is, relatively unaffected by some of these outside factors. So specifically, getting into the pandemic's role, I think, one of the interesting things is it's been quite a boon for a lot of businesses, right? But, because a business might see an uptick or some growth because of COVID, how does a business then continue to capitalize on that growth? Obviously the pandemic is, in the grand scheme of things, a shorter term obstacle. But, just very curious, guys, what types of impacts did COVID have on the security industry as a whole, and more specifically on your business?
Yeah. Ryan, do you want to answer this, or you want me to?
Yeah, I was going to say it was definitely twofold. On the positive side, positive for us as a security company, it led to an unusual and extremely high amount of business coming in the door. And of course, us being the go get them and action guys, we wanted to be able to take care of people. I mean, it's in both of our bloods, and I can speak for the whole company, everybody that works here. Safety is a priority. And to see so many people in need of protection, we felt the need to go and fulfill. But the downside to that was not allowing or not giving us the amount of time or space to be able to build up funds adequately enough to be able to handle such large growth. I mean, just as an example, this company went from hundreds of thousands to a couple million to a couple more million in the course of the first 3 years. And the biggest blow up was, of course, once COVID kicked off. So we weren't adequately prepared to be able to handle that financial difference, going from 15 employees to 30 to 60 to now we're well over 100. That would probably be the downside, was the financial. And then, of course, tying into what you're saying, Casey, and just not having as many of the lenders wanting to jump out at you, other than the MCAs, which obviously led to a predicament that we found ourselves in. So that's what I've got to say about that, for sure. You got anything, Christian?
Yeah. I think that was pretty much nailed in.
Yeah. I remember when we first met with VSO, we were really surprised at the growth. I mean, it was from our perspective, it's fantastic growth. From an operator's perspective, it can be a bit daunting. So we understood why you had to take some of the fast money, right, in order to kind of at least bridge the gap there. One of the things we also noticed, though, was it seemed like you had attracted quite a few customers, but then were able to retain those customers. It's almost like they got a taste of the services you provided, and decided this was more than just a short-term security need for providing services for security for unoccupied businesses, but this was something that continued on.
Yeah, I would mainly say the reason for that, Casey, is so, ever since the pandemic actually kicked off and stuff, and the aftermath of that, just within our industry and our market, and of course, talking with our local community PD partners, we have visibly noticed an uptick of crime since the pandemic happened, right? And mainly during the pandemic, with all the businesses being shut down, they were just left open to be a victim, right? So that's where the huge uproar and influx of security was needed. But afterwards, that crime it's still around, right? And so now the way I see it is like, you can't put a price on safety. And of course, when our team members and our security officers get put into these businesses, they become a part of that family. They build a rapport with the client, and therefore with the combination of the current crime that's still happening, as well as that that connection our officers make with our clients, they more see it as a long-term investment, for the safety of their people, their establishment, and of course their property, and so it's definitely it's a worthy investment for times like this.
Yeah.
And a big part of the retention too, Casey, that you touched on was while crime was upticking, a lot of our competitors or people in the same career field were taking a lot of advantage of that. I mean, I know in the Seattle area, we were hearing rates that were going for astronomical prices that normally a security company wouldn't be able to get away with. But when people are in fear, they will give everything and anything to protect what is theirs, and we didn't do that. I think that was one of the relationship building aspects that we brought to the table, is like, we didn't care whether crime was worse or whether it's good. Like, these are our rates. This is what we're going to charge you guys if we're not trying to rob you. We want to be here to help you and make it as cost effective as possible. So I believe that had played a major result in the retention aspects.
Just like any successful business, right? It's all about relationships and building that trust with your customers. Yeah, thanks for that background, guys. One of the other bullet points here, disrupted supply chains. I mean, this is one thing we've seen time and time again with businesses and how they're affected with by the pandemic. It's hard to build inventory, or it's hard to gain access to certain needs, when everything just seems to be backlog at this effort, and then trying to raise capital on top of that only makes things harder to do. So industries positively impacted. We talked a little bit about security firms here. I think it's definitely been a boon for other types of businesses, e-commerce, technology, certainly in healthcare, right? But also delivery and streaming services. So it's been really interesting. I think there's a lot of work to be done when we go back and we revisit and we try to learn some lessons from COVID. But positive or negatively affected, these businesses are still struggling to gain access to capital. And again, that is the issue that Founders First is trying to serve. So financial solutions to maximize capital efficiency, that's really what we're trying to provide here. Again, there's no loss of control or equity with the Founders First funding platform. Our interests are aligned. We have two products, as I mentioned, a traditional term loan, but revenue-based financing as well, where the payment is going to scale based off of the cash flow of the business. So still structured just like a term loan, typically 3 to 5 years, but for businesses that might be seasonal or have lumpy collection cycles, annual payments, things like that, could be a good option for businesses that are trying to solve some cash flow issues. And again, the bigger piece here is that Founders First is really here to support the growth of a business, not only from a capital perspective, but from a knowledge, networking, and advisory capacity as well. Many of our businesses, we don't require businesses to go through our programs for funding, but many of our businesses will go on to continue their advisory service with us as well. And then just to dive in more specifically to a couple of our products here. So again, term loans and revenue-based financing, very much structured the same. The revenue-based financing model would have a flexible monthly payment. I think of it as a fixed single-digit percentage of your customer payments on a monthly basis. The requirements that we look for are businesses that have been in business for at least a year, have some type of predictable revenue. We don't require profitability, but we want to see a pathway to profitability, and then growing or positive revenue trends. Typical companies, typically we'll work with companies that are doing $1 million up or above, but can work with companies as early as doing $500K in revenue. Outside of that, some of the businesses we cannot work with just based off of the relationships with our investors are cannabis, weapons, gambling, and liquor, and also nonprofits. Businesses that work best, we've touched on this a couple times, but asset light, service based, just like veterans security operations, companies with long-term contracts in place with predictable or recurring revenue, SaaS or tech-enabled and tech-focused startups and companies, and consulting businesses like marketing agencies, advertising agencies, or consulting firms. Of course, we'll provide our contact information afterwards. We're always looking to partner with, any types of businesses that are helping to support their clientele. We do have a wonderful product here to offer that, is essentially structured to be so that we can be a long-term capital provider for our member companies. With veteran security operations, we did our first funding with them right before the end of last year, and I hope it's the first of many, because we want to continue to support this business as they grow. Nothing but good things on the horizon for these guys. Tracy, I'll let you take it away. I'm sure you might have a few questions that have come through, but I'll let you send those my way.
Okay. You want to go to the next slide? Okay, so this is a question for all of you on the panel here. How can businesses balance the need to invest in growth with the need to conserve capital?
Yeah, Ryan, Christian, I'll let you take that one first.
Yeah, so Tracy, I would say when a business is considering sources of growth capital, it is very imperative to clearly outline a vision of where you want to see your business and the steps necessarily obtain that growth. I would say it's also very important to understand the right time to seek additional funding and the right partner to work with that best meets your business goals.
Yeah, I echo all of that. Yeah.
Okay, and what made Founders First the right choice for VSO's funding needs?
Founders First was, one of the first lenders, if not the first, to truly believe in the story and the vision for our company and for the veterans that we have. You guys were willing to work with our financial situation, having multiple MCA positions, and it was always hard talking to traditional banks, or because they were sold on the story, but the minute they see the black and white, it's just like none of the story matters, and you guys were able to see past that. Your belief in our story and mission and seeing the vision of growth for our company. You guys were able to take on the refinancing of the debt as well as providing working capital in order to expedite our growth quickly. And that's something that we had in the vision in the beginning, but it got delayed and altered due to everything we've already, discussed. Your support has been critical in driving our growth, as well as freeing up, like that one slide showed, freeing up that capital on the month-to-month, day-to-day, to not put us in a bind. And that was very, very critical for us. And it helped us support like our veterans that we do have with us with better training. We were able to hire better people to do our training for us, in-house training, equipment, tools, vehicles, and competitive pay too, because that was always something that on me and Christian's mind, like to differentiate us. We wanted to be able to pay our people, a career level wage and offer opportunity for growth, and not just like what we had seen in the industry for so long, where you kind of come in at a level and you typically stay there, or you might grow, you might make a little bit more money over a course of 20 years if you were that dedicated. These were the elements that we found necessary, to ensure our team's top of line performance and keeping morale high. And that's why we definitely enjoy working with you guys for sure.
Yeah, just to add on top of that too, obviously working with tons of small businesses, there's some businesses out there that are just looking for capital, right? And maybe even though Founders First offers, all these other aspects, or we're looking at this as a partnership. Some businesses just want to check, and that's completely fine too. We'll fund those businesses as well. But what was really apparent from the beginning was how VSO looked at this relationship as a true partnership, working together to see what the focus is going to be on and where this company can be. That's really powerful to us as somebody providing capital, because we want to continue to support the business through the vision of those that are actually running the business.
And then why did VSO choose to ultimately work with Founders First over some of those other lenders? I think you touched on it a little bit, Ryan, but if you want to go into that a little bit more.
Yeah, I can definitely elaborate on that, Tracy. But essentially, VSO, we were very ecstatic to work with Founders First over other lenders that we've reached out to. And that was mainly due to your guys' willingness to prioritize, minority small businesses and assist with like our, ambitions and our ventures. I would say that Founders First, you guys proved your love for our nation's veterans by your immense support to our, our mission statement, and like essentially helping fund us to provide our service members an easy to continue providing our service members an easy transition from the military to the private sector of armed security. So really, just to recap, it was mainly due to your guys' willingness and support of our mission statement that really stood out compared to other lenders. You guys are actually very transparent and very willing to help us and support our mission to just give back to our country's veterans.
Appreciate it. Thank you so much. So I think this is our last slide here. Just again, I know we've got some partners and those interested in partnering with us as a capital provider. We've got capital at the ready. Our doors are open for business. So regardless of what you might hear out there about some of the capital markets, where those equity investors, other lenders, certainly banks, we are ready to fund. So, if you work with clients that are in need of capital, specifically veteran-owned business or businesses that are owned or ran by minorities, women, or serving low to moderate income areas, please feel free to reach out. Leave my contact information here. I wanted to make sure we got the contact information of Ryan and Christian as well. We do have that. I think, Tracy, we will be sending the deck out too. So,
Yes, I'll share with everyone.
If you'd like more information on Founders First or on veteran security operations, please feel free to reach out to any of us. And specifically, if you do have any security needs and are here in the Pacific Northwest, I know these are your guys. So again, Christian, Ryan, thank you so much for your time. We are looking forward to supporting your business as you continue to grow.
And then
Thank you.
We do have a couple of questions.
Sure, great.
Okay. How does a business in the minority category get a different or a favorable look, I guess, from Founders?
Got it. So, it's just part of our mission is to provide capital to typically underserved or underrepresented founders. It's not that they get a different look. We underwrite these businesses based off of the financial performance.
Okay. And then I guess kind of a follow-up to that, how could a person start a business with limited capital? Is there a way that a minority status helps?
Yeah, absolutely. And depending on your classification or qualification, there are different certifications that you can get. So talk with some of your small business advisors or any other folks in your network that have access, or reach out to us here at Founders First. We'd be happy to contact or put you in contact with some of these certifications that you can get that will help you as you launch your business.
Okay. And then I know you touched a little bit on profitability. Can you dive in a little bit more on kind of the need for profitability or the lack thereof, or what you're looking at?
Yeah. So like I said, we don't require profitability. We're looking at the long-term plan of a business. So businesses that have locked in revenue, like through contracts or subscriptions or things like that, because we know that revenue is coming down the road, we might be more okay with seeing a lack of profitability on those businesses, as opposed to, say, a business that does more transactional type revenue. So it's more of a case by case basis, but just because I guess the point there is, just because a business isn't profitable doesn't mean we would exclude them from our funding.
Okay. And then another question, and this includes VSO a little bit. What was it about VSO that was an attractive client for Founders First?
Yeah, so number one, supporting veterans. Plus, it's operated by Ryan and Christian, two veterans who have provided us with years and years of service. So that was number one at the top of our list. Number two, providing high quality jobs. That was what was even a bonus there, was that they were hiring veterans straight out of service, helping place them in the jobs. So very mission aligned with us. Outside of that, looking at it from a business perspective, these guys grew like crazy, and there was a need for capital there. We could see it, and we could see that there would be an opportunity to continue to fund these guys. And number three, we touched on this a little bit, but it was the strength of the relationship with their customers. Now they have some really good contracts with quite a few big businesses out here in the Seattle area. And that really helps us get comfortable with a longer term, funding opportunity, right? So those were the three things really that we saw. And then of course I think Ryan and Christian went into the reasons they decided to work with us.
Okay, so kind of a follow-up. What we're looking for are companies that have a strong customer base or long-term contracts in place. That works best for Founders First.
Yeah, absolutely. That makes things a lot easier, right? Because one thing we're looking for, we want to do 3 to 5 year loans with businesses, and so when they've got strong relationships with their customers in place, it makes us, makes it a lot easier to be able to do that.
Okay, and then we have another question. Following up on an earlier one that we had, I'm a bit confused why a minority business who fits, why Founders First has a borrower who fits in a minority category. Why wouldn't they go to any lender? What's the incentive to work with us?
No, we, a business can go to any lender. Why would they go to Founders First? Because we can fund, and this is outside of the diversity component, we fund businesses that other lenders cannot fund, and it's because of our model. Just like Ryan and Christian were saying earlier, sometimes it's hard for banks to get comfortable with businesses unless they have a ton of assets to collateralize. We don't need to do that, right? Because we're making a bet on the predictability of their revenue. So what I would stress here is that if a business cannot find access to the type of capital they're looking for, either from a bank, from an institutional investor, and they don't want to go the short-term high interest route, then Founders First could be a good option.
If I can put a plug in for you guys too, Casey, on,
Sure.
on why
Always.
I would personally pick you guys. It was touched on in the slides earlier as well, is that you guys are not necessarily so concerned about asset-based or collateral-based, as well as you're not trying to take equity at the same time. That is a super rare combination, because we have dealt with investors before, and the first thing that they look at is how much equity can I obtain out of this deal. And so with you guys, to me, like that's almost like a dream, situation. So I'd like to throw that out there too.
I appreciate it. Yeah, that's very good point. Yep.
I also throw out a plug.
Yeah. Go
ahead. Back to like our personal experience with Veteran Security, like with us, essentially reaching out to a bunch of other lenders, is what really sticks out with you guys is, one, your customer service, your transparency, and your like swiftness, right? Because other lenders, like, they're not nearly as friendly. it always kind of seems like they're kind of withholding some kind of information. They're not telling like the full story, right? With you guys, you're very transparent up the front, very quick, and like just willing to really jump on this to help us meet our deadline. So overall, I'd say like the customer experience from the side of things was just phenomenal.
Appreciate that. Thank you. Tracy, what else do we have?
I'm trying to market to vets and women. What's the advantage you can help my borrower? I'm sorry if it's repeated. I just want to help these categories because it means something to me. So what's something, I guess, that we can give this broker to set us apart of why someone would want to work with us? I think we've covered it, but maybe if we could just sort of bullet it out.
Yeah, absolutely. So, tons of good information on the presentation here, which we'll send your way. Tracy, please, if you could, maybe connect us so that I can have a longer conversation. And I would be happy to provide some additional collateral marketing materials so that, you could go out and target these types of businesses specifically.
Okay, I think that was it.
All right. Well, again, just want to thank our guests, Ryan and Christian of Veterans Security Operations. We have enjoyed our relationship so far, and we're looking forward to continuing this down the road. Of course, one thing I forgot to say, we can go up to $2 million in total exposure with any business. I think you guys are going to outgrow us very, very soon, looking at the snapshot here. So, we hope to be a long-term partner, but if you outgrow us faster than that, then hey, that's a win for us too.
For sure. Well, we appreciate it, Casey.
All right. Thanks, everybody. Have a good day.
Take care.
Okay. Bye-bye.